Ksolves India released their latest earnings report for quarter one fiscal year 2026. And yesterday, they released it yesterday, and their stock also crashed by 11% yesterday. So the report must have been quite a shock. So let's see what's actually written in the report. This is an overview, performance highlights, performance highlights. All right. So revenue increased 19.3%. Revenue increased 19.3% year on year, and quarter on quarter it increased by 13%. Profit margin was at 26.4%, and profit after tax margin was at 17.1%. A key update came. The board has declared an interim dividend, the first interim dividend of 1 rupees per share for fiscal year 2025-2026. There was revenue growth, 19.3%. Profit after tax, the final profit margin is 17.1%. So moving on, even more important details. So we already saw this revenue growth. The revenue is currently at 37 crores, 37.6 crores for this quarter compared to the quarter one fiscal year 2025, that is the last year, the previous year, 31 crores. Now, this is the important thing. EBITDA, which is earnings before interest, taxes, depreciation, and amortization, declined. Even with revenue growth, EBITDA declined to 9.95 crores from 12.02 crores. So EBITDA has declined. Profit after tax has declined by 28% year on year, 640 crores, 43 crores as compared to 895 crores. And of course, profit before tax has also declined, obviously. So revenue has grown, but profitability has declined. So is this concerning? If anyone's a Ksolve investor, should they be very concerned, worried? Is Ksolve failing to achieve profits? So what's happening? Fortunately, they have given a breakdown or reasons for their quarterly performance. Again, as we saw, EBITDA margin decreased from 38.06% to 26.41%. So profit margin at the EBITDA level has decreased. Now why? Now here they say that from quarter four 2025, from that point onwards, they have done some strategic investments. These investments are for the future of the company. They say that these investments will help transform the company into a more, basically a more mature company, more revenue, more future growth, better relationships with clients. So in order to accomplish all of that and into having a more mature business model, they have done some investments, strategic investments. And investments, of course, cost money. So more investments means more costs, and this leads to less profits. So the strategic investments from quarter four 2025 created a new base for margins. So new base for margins meaning a new base. Instead from the high 30s, now they are in the mid 20s. But these are all for future growth of the company. Now, what are these strategic expenses, these strategic investments? Okay, first we have ESOP. You'll be wondering, well, what's ESOP? ESOP is Employee Stock Ownership Program, basically providing stocks of the company to employees as compensation. Why is this done? So this 0.66 crores, of course, a negative impact on EBITDA because of the cost, and it's done for employee retention and long-term incentive. So if you're an employee and let's say you like the company, believe in the company you work in, and they give you stock, so you work harder for the company, the stock does better as the company does better, and you make even more money. So to incentivize workers and to retain workers, receive stock compensation. And I think stock compensation is usually received after working for some time. I'm not sure, but again, okay. Employee retention and long-term incentive. So ESOP is one of the big strategic investments. Uh, Followers, yes. Then top level hirings and salaries, including promoters. So they are paying more salaries to top level management and, of course, the promoters. And they're even hiring people for top roles from outside, bringing in even more outside expertise for future of the company. 1.42 crores. Uh, and this is the focus here is leadership strengthening, so a better leadership. Then we have events participation. Now this is non-recurring and led to a 1.93 crores expense. What exactly is events participation? So Ksolves goes to these, you can say, events where they can present their new products to potential clients, new people. So if they have made a new product, let's say an example, DFM, data flow manager, it's the big product, the next big thing. And Mind AI Ninja, that is one of their new big products. So they've recently developed them. So to advertise them to potential customers, they are now going to these events where they will present them. So these events, participating in them and presenting involves a cost. And of course, so these are all branding and market presence initiatives. Again, long-term expenses. And all these led to what? A decline in the EBITDA. So we just saw a breakdown of these new investments, what they're helping in. Okay, moving on. In events participation, we saw this, a successful participation at key industry events. This is for quarter one. What are they used for? Enhancing brand visibility, networking, and pipeline creation through strategic participation. Pipeline creation is basically process for uh, getting new clients. I understand that. I understand. I think that's what means. No, though not sure. So they participated in Data Innovation Summit. It was held on May 7 to 8, 2025 in Stockholm, and they presented again the big product, the next big product, DFM. Then we have the DGIQ plus Enterprise Data World event taking place in California, presenting again DFM and other cost effective data governance strategies. An event in New York presenting their Salesforce capabilities, Salesforce products and services, and helping clients with Salesforce products and services is a very important part, a revenue source, a very important revenue source for KSOLs. Then we have an event in Las Vegas, Nevada. Las Vegas, nice. Gartner, event name was Gartner. And again, they presented DFM and the client shared the experience with DFM. Very, very nice. So these events help increase brand visibility, and that's important. And that is again long term. The results will be that in the short term, margins are down, profits seem low. Profits are low, but in the long term, they're trying to get even more clients, more long term clients. So there's more recurring and stable revenue and increased profitability in the future. Moving on. Now, journey to a matured business model. This is a transition that ASOLs is actually trying to accomplish right now. Okay, maturing into a full-fledged business model, moving towards turnkey projects and high value delivery. Okay, high value service delivery, projects with more money, more profits. Turnkey projects, turnkey projects are basically when it is a project which from the start to the finish, from designing to developing to delivering the product or a service, the entire thing of the service, even getting the raw materials, getting the, let's say, the engineers, everything is done by the company. So instead of taking work where the client gives them something to do, gives them the design and asks them to do the developing maybe, or something like that, like a portion of a project, instead of getting portion of the project where they have to do this specific thing. Now, Ksolves is trying to move into turnkey projects where they're trying to do the whole thing. So if they're getting a project from the start to the finish, from design till delivery, they want to go for that projects. Now, product centric growth strategy. I think they have done this. They have been very successful in doing this. Establish a dedicated profit center for products. Product centric. What is product centric? Remember the DFM? That DFM, a lot of DFM was written. DFM is data flow manager, the new product. So they're trying to create new products, and these new products they hope will be the drivers of growth instead of maybe just relying on reselling, just relying on other products. They will now try to, of course, create their own products, leading to more profits. And very important, their own products, their own brand will, brand visibility will increase because it's their own products. Ksolve has their own products. They're not just using their other products. The perception will change to yo DFM or Mind AI Ninja. Their own products are succeeding. So nice. Then bigger deals, longer clocks. They're moving towards large products and in plate extending conversion timelines to months, quarters. Okay, larger products which will take longer times and will be for longer times to take these projects and longer times revenue, long-term revenue coming from projects. In longer vision, they're taking bigger deals, meaning longer contracts. So now no more focus is on year growth instead of quarter-on-quarter growth. Navigating through transition fluctuations, short-term variability expected as part of mature journey. And strategic alignment is focused on scalable and repeatable value. So their own products, they're trying to take on larger projects. They're trying to work with same clients and getting more work from scale times. So their own products, which can be scalable and repeatable value, they're getting recurring revenue again and again from clients. Then, I hope you like the video, by the way. My explanations are a bit. eh. So 548 employees, a global company, 13 years of service, 85% of revenue by repeat customers. Top 10 clients contribute to 58% of revenue. Massive client concentration. That can be risk. That can be risk. 30 plus countries served. Moving on, geographical business presence. 58% of revenue comes from North America, so US, Canada, mostly US, and Mexico also North America. I think so. 23% from India, 7% from Europe, 4% from Australia, 8% from rest of the world. So a lot of reliance on the US. The last thing that I think we can see is this. Yes, of course. Revenue by sector. Revenue by sector means the clients, what are they doing? Are they from the retail sector? Are they from media sector, telecom sector, banking clients? 27% of revenue comes from telecom, 16% comes from technology, 19% comes from services. You think about services, what does services mean? Services means public safety, hospitality, legal and consulting. Very diverse. So these are the three big sources: technology, telecom, and services. And of course, again, services includes public safety, hospitality, legal, and consulting. 8% retail, only 7% is coming from the banking, financial services, and insurance clients. 6% manufacturing, 5% education tech, 4% healthcare, 4% real estate, 4% advertising and marketing. Is it diverse? A lot from telecom. So, yeah. And last but not least, yes, remember those top level hirings and salaries promoters, big expense for these strategic investments? There's more information on this. We have Jerry Wong. We have Jerry Huang. Who is Jerry Huang? Now it says here he's the current vice president. I think, yeah, he's the current vice president of the Salesforce Services Division of Ksolves. So he currently works in Ksolves. He's one of the only 300 to 500 Salesforce certified technical analysts globally with 20 years of experience and leadership roles, Salesforce Australia and Infosys. He brings a lot of expertise, depth, and leadership to evaluate our Salesforce impact. And of course, Salesforce products and services are a very important source of revenue for KSOLs. So we have Mr. Nishant Agarwal, we have Mr. C.A. Darpan Aditya, Mr. Asim Kumar. Like these guys are coming from HCL, Ericsson, they're coming from TCS, okay, and EY. Nice. Mm. So they're hiring um, expert experts, they're hiring experts, and of course, employee stock ownership program with an objective to motivate and retain key employees contributing to future growth. So I think that's it. That's it, actually. Yes. Now this, of course, case holds 3,810 crores. And yesterday, this is interesting now. The stock rose, like the stock 344. Let me zoom in. Okay, 344 rupees in July 16, 391 in 18 July, and yesterday it crashed by like 12%. So any case of investor who bought here, hope you recover. That's it. I'm not SEBI registered, and hope you have a nice day.